There you go.
Hey traders, Cousin Vinny coming to you from theclosingprint.com with a look at the week ahead. We'll be talking about bonds, the trade that we currently have on, the sectors, the S&P 500, as well as big tech, the Russell, and gold, as well as the dollar. We'll also be talking about currencies and jobless claims, among other things. TLT is a trade that we took on the 12th of July, which is this candle right here. At the 107.80 level was our first entry, and we had a continuation through Tinkin-Sen at this point, and looking at Kijun-Sen up here at this level. We had a nice candle on Friday. If we look at the 15-minute, we can see that we broke through the Kumo. Looking at the 30-minute, we see the same thing. We look like we're going to break down through the Kumo, but we bounced back up and regained the top of Kumo. Looking at the 60-minute, we had a Kumo breakout as well. So we're seeing nothing but strength here. Looking at the daily again, we can see Kumo up above us, the 112 level as a potential level of first resistance, along with the intermediate level at Kijun-Sen. Looking at TLT with a Bollinger Band overlay, this is the 30-minute, note RSI, and note where MACD is, as well as the standard deviation is continuing to move higher. Let's look at the daily, because there's some things I want to point out there. We can see that we moved off of the lower Bollinger Band. We had a buy signal once we got above the high of this candle, and then we continue to move through the shorter term period averages. This is the 10 EMA here. We're through the 20 period now, and like I said, we had a nice run the whole day on Friday. We have the 30 period here and the upper Bollinger Band at the 111 level. If we overlay the volume at price and look at the Kirby levels, we can see that we're right at the top of this Kirby level. Note the amount of volume versus selling volume versus buying volume here. Once we get above this level, we have this Kirby pocket up to the 112.50 level. Then we have a more substantial level up above that at 114, and then a level above that at 115.50. Now that's all contingent upon RSI continuing to climb and MACD, histogram, and momentum continuing to move to the upside. I like to see standard deviation turn around, move in the opposite direction, but for now this trade still looks good. Note the volume that we saw versus Thursday. Just about canceled out Thursday, but there was some significant selling on Thursday versus the buying on Friday. This is the Spiders sectors candle glance. Note we talked about the banks, BKX, as well as KRE. They were flagging. They were either going to continue to move towards the 20 period, or we're going to flag out here and break out. So being it was a bullish pattern, that's exactly what we did. We are substantially above the 20 and the 50 period, so I would look to see some of this pull back at some point in the near future. Note XLK, we had a move lower on Google earnings, as well as Microsoft and a number of other big tech stocks that we'll cover in a minute. But looking at XLV, we had a nice flag breakout here. We have a crossover coming on XLU, XLP, XLV crossed over on Thursday. XLE, we're at a double top. We're at a double top here on XLP as well, so I'd be keeping that in mind. And on XLK again, we're sitting right on the 50 period moving average with the 20 period just below that. On the stockcharts.com splash page, one of the things I like to, or homepage, one of the things I like to look at is what are people concerned with, what are they looking at, and by virtue of the size of these, it shows you what people are paying attention to. Apple, Google, Intel, that some of these tech stocks took a hit last week on earnings. So if we look at some of these, looking at XLK, I noticed a number of people getting back into that. Note the change in RSI moving back down to 50. This is considered a bearish failure swing, by the way. When RSI gets above the 70 level, moves back down, tries to move back above the 70 level, and it fails, takes out these lows right here, that's a failure. You can see what happened here. Looking at this again, if we get back down below these lows, it looks like we could continue to move lower. I note where the lower Bollinger Bands are and the 200 period moving average. Note the volume on Friday, and we have crossover on the stochastics as well as MACD. Looks like it's going to move back lower. Look for the histogram. Once it moves back through 0, that would be a crossover signal on the MACD, and note where ADX is. This is a chart of the semiconductors SMH. Note that we moved lower. We look like we're approaching the 50 level. We had a bearish failure here as well. So far, we are moving back down. If we take out the 50% level, we'll look for lower prices on SMH. We've been in an uptrend since the November bottom. We had this sideways descending channel we broke out of. We again sideways descending channel and a descending channel. So then we broke above that, and now we're moving back down lower. Note the volume on Thursday and Friday. So I'd be careful with this one. Note that ADX is pointing down, and we had a crossover, a sell signal right here on ADX. So that's pretty significant if you're thinking of trading or are already in the semis, to keep an eye on XLK and SMH. Also note this reverse Kirby here. If we get down below this level right here, easier to do this since I don't have a horizontal on here. If we move back down below this level at 38, which is the 20 period moving average, as well as the 50 period, I would look for lower prices as we drop down into this inverse or reverse Kirby with a shelf down here at the 200 period moving average, which is the white line, at 35.50. And of course we have the lower Bollinger Band here at that level as well. So stochastics could move lower for some time if we see continued selling. So all these things are starting to weigh on what I'm seeing on the spiders, and one of the reasons why I went into TLT in the first place, as well as with regard to the fact that I consider buying the blood on that particular trade, TLT, as we're fairly oversold. This is a chart of TLT with an overlay that Stephen Place put together. It basically shows you the percent deviation from the 200 period moving average, and where we are right now is -8% on the TLT. We were down here at -11.34% when we hit these lows. I would look for continued retracement, as I pointed out in the beginning of this particular video. Considering the previous factors, I'm also looking at the comp, obviously, with the weakness on XLK and SMH. Note that we're sitting right on the 10 period moving average. Excuse me, this is the 8 period on this particular chart. RSI has turned down. We note the volume, and we note the stochastics is turning down. I would look for it to move down below 80. Also note the Kirby shelf here at this level here, which is right by the 20 period, which is 34.85. So that would be a nice pullback, and also that area where we broke out before as support, major support, along with the Kirby shelf here. Note the deviation from the 200 and the fact that Microsoft rolled over last week with regard to earnings. Okay, we had a gap down. If we look at Google, we have a move lower. This is earnings related as well. Note where the percent that we are above the 200 period. We're currently at 14.12%. So for this to move back lower is not unexpected. Double top as well. Looking at the spiders, we are back up here at highs. Note that we're 10.85% above the 200 period, which is still rising. Let's look at a few other things on the spiders. Notice we may have a bearish failure swing here as well. where we move above 70, move back down, we fail to get back above 70, and you can see what transpired here on this move lower to the June 24th low at 155.73. If we fail to get back above 70 and this turns down, that would bode negatively for the spiders. For now, we're pulling away from the standard deviation to upper Bollinger Bands, so I'd watch that, and we have the 8-period EMA right here below price. Volume is decent, MACD and stochastics still are pointing up. On the spiders, if we look at the shelf here, there's another level of support. We just get back up here and look at that. That's around 166. So that's something to keep in mind. Also, let's take a look at the weekly. Note where the Kirby is here on the weekly. Note the RSI divergence. We're getting back above highs here. We're at the double top, but if we push above this level, that would be a negative divergence if RSI doesn't get back above here in oversold territory. So keep that in mind. And you see on the weekly, the ADX is out here up at 30. Since the October 11 low, that's a 50% gain, and since the November low in 2012, that's a 25% gain. So we're looking pretty good for the most part. That's why I took some of my money off the table on my 401k. Looking at the XLK performance relative to the spiders, XLK:SPY, we can see that we've had relative weakness on the technology sector relative to the spiders. For me, in order to be long XLK, I want to see this get back above and break above this trend line drawing across the tops here, which would show a change of trend. Also note where RSI is on this particular chart. Some of you are trading gold, so let's take a look at that. We can see that we're 17% below the 200-period moving average, and this is moving down. Let's take a look at some Fibonacci levels. Which would offer resistance as well once it broke down through this level. So that's just beyond the 618, and you have the 200 period up here as well, as we mentioned. Take a look at the gold spot price end of day. We can see we moved through the 20 period moving average. We have the 30 period here right where we closed, and we have the upper Bollinger Band just above this level. So that 618 is up in this level here, with RSI continuing to climb. You want to see standard deviation turn around and move in the other direction as these Bollinger Bands have started to squeeze and are flattening out here on Thursday and Friday. MACD continues to move higher. We had a crossover about a week and a half ago. Alright, so with respect to gold, you also want to take a look at the dollar. We can see that we've chopped around here. We moved up to this high at 84.60, back down to 80, back up to 84, and down to 83 again. And most of this, as many people have pointed out on the stream, along with Arthur Hill over at StockCharts.com, is due to a lot of the talk about tapering, the misconceptions of what Bernanke is saying, and so on and so forth. So we did hit the upper and lower Bollinger Bands. We hit the upper Bollinger Band here again. To see this move back down to the lower Bollinger Band isn't out of the question. This is a chart of the euro that Arthur Hill had pointed out as well. We've been chopping around here inside these Bollinger Bands. Note where the Bollinger Band signal is right along zero. We're squeezing. If you drew some horizontal lines here containing the price, what you want to do if you're going to trade the euro or the dollar relative to the euro, the cross, you want to see which way this breaks out of this base in here, connecting these lows, these highs. Whether or not we break higher or break lower, watch your MACD signal for an indication which direction we might expect to go. This is a chart of the yen. We had this big drop during the fall of 2012. We had this move lower along the Bollinger Bands. We bounced off. We came back up and made it through the 20 period and bounced back down. So watching the yen, if the Bank of Japan continues to ease, we could see this move lower, in which case you would likely see the dollar move in the opposite direction. So keep that in mind. Note where MACD is, and all of these currency pairs relative to the dollar and the yen should be paid attention to. Note RSI is climbing as well. This is a chart of the unemployment claims index that Stock Charts, I believe, added this as something that you could use in your studies as well recently, within the last 2 or 3 months. I don't believe it was a premium feature at some point, so you can do this scan as well. Just go to this particular ticker right here in stockcharts.com, and you can see that we continue to move lower off of the 09-08 peak that we saw, where jobless claims were up at the 650,000 level, 660,000. We're now down in between the 340,000, 360,000 range, and we're continuing to move lower, as you note by the moving average, the 52 MA on the weekly. So if this continues to improve, what that means is we could see further tapering by the Fed, which would in effect affect the bond rates, yields, and so forth. So let's take a look at the yields. Let's go to my candle glance chart of the bonds, and we've been talking about this for a few weeks now, watching what happens with yields. We traded in this area here when it related to interest sensitive stocks such as KRE, SIVB, and PACW, the regional banks that started to really perk up and got our attention. Note now, though, that the yields have moved down through their 20 period with the potential of moving down towards the 50. Let's overlay the RSI and replot these. We can see RSI continues to move lower on the yields, the 10 and 20 in particular. The 10 and the 20, this is the bond price, is moving back up through the 20 period moving average, which is one of the reasons why we have this trade on. Now note that we will keep a close eye on all of the factors that we just mentioned relative to the continuation in lower jobless claims, as well as news from the Fed about tapering and so forth that would affect the 20-year bond price, as well as the 10-year yield and the shorter yield prices, or the shorter yields as well. Now obviously the further you go out on the yield curve, the more volatility you see. So if you are trading bonds and you want to have less volatility, obviously you would want to trade shorter term bonds like the 5-year or less. Okay, let's look at XLF, and if we move down to what I call a chart with everything in it, note where RSI is. We're exceeding previous highs, and RSI is not quite in oversold territory. So we have some divergence here. If you connect these highs and we don't break back above the 70 level, that would be something to be concerned about on the XLF. We are overbought. MACD continues to look strong, and ADX is showing that the trend is still moving higher, that it continues to move higher, and that at 25 we are trending. So unless this ADX turns down and we see these two signal lines move towards each other, this looks like it can continue to move higher. A couple of things I wanted to point out as well with this Stephen Place deviation from the 200 period calculation, which you can go to his site and find, as well as pull it up. Here is the simple script for that. So I can put this in my YouTube video, or you can go in the comments section, or you can go to Stephen Place's site. You can get that script here by just going to this address in the address bar and typing this information in right here. Okay, and then you just go down here to the bottom and you just copy and paste this particular script into a new study. I think it's really nice because you can go to any chart. In this case, we're looking at WFC, Wells Fargo, and it clearly shows me that we're so far away from the 200 period that it's likely that we're going to see a pull-in. This also coincides with a chart I posted on StockTwits where I showed we were very close to the standard deviation, the third standard deviation, which was up here at 4508, and also the 1618 extension from this breakout here from this pivot low. From this pivot low to this pivot high, I drew fibs in the 127 extension. We exceeded, we flagged out right here, and then the 1618 was right up here above at 4508. So if we look at some of the other things that we traded recently, we can see where they are relative. See, we're up at 31. So all these bank stocks are way oversubscribed in my opinion. We had a nice little flag breakdown here on SIVB, PACW as well. Also noting that some of the stocks that we saw strength in, relative strength, were Amgen and a lot of stocks in the SBI sector, the biotech sector. Diana mentioned one as well, EC I believe it was, Ecopetrol, which is a biotech related to energy. You can see where we are, minus 14, but we had a nice, if you draw a trend line here, we had a nice break above that trend line and a change of trend. So I'd be looking for this to move back down to the moving averages here. I believe the 10 period is down here around 44 or so. So let's keep an eye on that. Let's see, EC, we'll go to our, and go to a standard deviation chart. We can see that we're outside the upper Bollinger Bands. Standard deviation is pegged going higher. We have MACD histogram overbought. So I would look for this to pull back to the 10 period, which is right here at 44, for a add or re-entry, or a new entry if you were looking at these stocks, because XBI continues to be a hot performer. Okay, so this is Cousin Vinny coming to you from theclosingprint.com, where I have a lot of new information, or a lot of information for new traders here under strategies. Day trading the box, which this video covers right here on the front of the page. I've kept that there because it's pretty popular. It's 1,000 views now in over a month or two. So, but the main reason I came here is I wanted to show you, this is where my watch list is. I've said this for a few weeks now. I started posting my watch list on this particular part of my site. You can see the things I was looking at last week and the criteria that I was looking at for a long or short in this particular case. So look for an update here on Sunday night or Monday morning. Sometimes it's as late as Tuesday, depending on what happens in the markets. Okay. So again, this is Cousin Vinny coming to you from theclosingprint.com and Day Trader Bootcamp, where you can come and check out a free 2-week trial GTO has. We can meet some of the traders in the room and perhaps make some new friends. Take care. I hope this helps, and we'll talk to you next week.